Welcome to Joe's Happy Hour, a show about markets and life hosted by Joe Fahmy. This podcast is for informational and entertainment purposes only and should not be regarded as personalized investment advice or relied upon for any investment decisions. Joe Fahmy is an employee of Zor Capital, and he and his clients may maintain positions in the securities discussed in this podcast. All opinions expressed by Joe are solely his own and do not reflect the opinions of Zor Capital. The views expressed by guests are their own, and their appearance on this program does not imply an endorsement of them or any entity they represent. Thank you and enjoy the show.
Brian Lund, Phil Soussan, you've both done my podcast before.
Yeah, I'm still here from the last time.
You
I just never went home.
We've got a cot under the table and just lay there.
This is great to connect you guys and hopefully have a great conversation about music, markets, the economy, whatever else you want to talk about. You know, this is the first time I don't have any notes in front of me. So I'm hoping you guys carry the conversation.
What did you do with them?
No, I didn't prepare any because I'm confident I love you guys. You guys are very versatile and can talk about anything, and I'm not worried about running out of space with topics.
So no pressure.
No
Thanks,
pressure at
Joe.
all.
Thanks a lot.
He's just shifted the pressure
Okay,
over to
here
us.
we go.
I'm kidding. Author of The Lund Loop, trader, also a musician. I'm surrounded by legendary musicians, apparently. And Phil Soussan, also investor, obviously known as a legendary musician, played with Ozzy, Vince Neil. You played with Joe Fahmy at his birthday party,
I played
too.
with Joe Fahmy.
You can add that to your
absolutely,
resume.
I saw you play with Joe Fahmy at his birthday party.
Oh, I'm going to put that on my resume
Yeah,
as
right.
well.
Let's start markets, because obviously we're in a really strong market. I wanted to ask you guys, do you consider where we are in the markets as far as influencing, you know, you're more of a trader, you're more of an investor, as far as influencing anything you do? If you say, hey, you recognize we're in a really good bull market, that might change a style with your thing, or vice versa in a bear market. I'll start with you on that one.
Well, first let me do the codicil that like I am a trader, but I also have like all my investing and retirement buckets all filled before I even trade anything. So I want to make sure people know that.
Sure.
You know, I think we're in this really weird phase of the market, and it reminds me a lot of something that you and I probably experienced. Maybe you did back in the 90s, right before the dot-com implosion. So you go to this part in the market where it's kind of getting crazy, and all the value people and the fundamental people say, okay, it's kind of getting crazy. But the technical people say, hey, we just follow the technicals, and it's not crazy.
Right.
Now the technical people are starting to say it's kind of crazy, right? They're starting to see things like, you know, gold go parabolic, and they're saying that shouldn't work, right? So even the technical people are starting to go, right? So I think I don't know where we are in the innings compared to the 90s, but it feels like we're like 7th, 8th inning, maybe. And I know it because a lot of my technical analysis friends that are really good traders are very frustrated that they're not catching some of these names that are going 25%, 40% in a clip.
In a short period of time.
Because using their technical analysis rules, they would never be in those stocks because they're just too overextended, right? And good risk management says I should be taking some profits, while the YOLO crowd is just like more. We saw it with Beyond Meat last week, right? It went from like basically on the doorstep of bankruptcy, popped, $3, and then it went to 8, right? Well, most of my friends that would have been in it from a technical analysis standpoint, when it popped that 3, or certainly when it started, they would, I'm done. Right? But there were other people that wrote it up to 8, and they're like, they don't know what they're doing, right? So it's an interesting spot we're in, where all the fundamental people are like, this is crazy. A lot of the technical analysis people are starting to say it's crazy, and you still got the YOLO people that are just like, yeah, let's keep doing it.
It's a very good point. Your thoughts on that, Phil?
You know, when I start seeing the market kind of going up and the impending sort of doom on the horizon of certain issues such as a national debt and how that's going to play out, I start to get a little cautious. So I want to make sure that I'm hedging things. I want to make sure that I'm kicking things out longer term. And if I've got a position which has been doing very, very well, as you know, we've spoken about this before, I like to take some profit off the top. And then start to kind of hedge a little bit. A good example might be NVIDIA, where I liquidated, I think, probably about 80% of everything I had on its run up, and I've got about 20% left. And if it makes a new high, I'll sell a couple of shares and I'll buy a put, a long dated put. Try to hedge it that way. The other stuff I'm like yourself, I think my basket is very clearly defined in terms of long-term investments, a dividend portfolio which I don't touch, and there's a small amount of that which I will trade with and I'll play with. But even there, I start to get a little bit cautious about the kind of risk that I'm taking. I want to lighten up on. I do a lot of option writing, so I want to lighten up on a lot of the puts I might have written, and also be aware of that I'm happy, owning those shares. So it does play in. What you mentioned about gold is very interesting as well, because during the pandemic, it was very unfavored and didn't get any love at all.
Right.
Instead, everyone was putting their money into cryptos and into
Bitcoin and all.
and NFTs. That was a good one, right? And so it didn't get any love. So I was expecting.
You don't have any crypto punks? Is that what you're saying?
I do not. And no non-fungible tokens or whatever. But I would imagine gold would have gone up at least with the change in inflation of those 4 years. So you could add 25% onto the price of it. That would be reasonable. But then it also is a hard asset as well. And I think the concern may be in a macro viewpoint that that handing out pieces of paper as IOUs, which is paper currency, may not be as secure as one would think, and maybe that's got something to do with it as well. But I agree, gold's gone like parabolic.
You mentioned innings, and that's what's great about the markets is there's so many different opinions. Because there's been some people on financial television saying this is still the early innings of AI.
Right.
And then other people saying this is, like Paul Tudor Jones recently said, this is similar to the end of '99, the end move there. Like we could see that in the next few months. But that's what's great. There's different opinions. At the end of the day, we just have to trade and invest in what's in front of us. But I remember when I first got involved, 95, 96, it was getting to be a little bit excessive, 97. And then a few of my friends jumped in. And the people who don't even know how to spell Dow Jones, they can't even tie their own shoes. And I'm like, oh, this is all done. Then it kept going. Then a few more friends were like, oh, this is easy money. And that was 98. And it just reminds me of two things. The moves in the markets can go on much longer than we can ever expect. I always say just when you think things can't go higher, they usually do. And in a bear market, when they can't go lower, they usually do. But also, I'm noticing some new friends getting into the markets, and a little bit worries me because this could be close to a top. But then I go back to these new friends got in 97, 98, and it still went on for a couple of years.
Right.
So that's where it's hard to gauge where we are because, again, moves can get excessive. I don't know your thoughts on that.
So you can have opinions on the market that are separate from how you manage your positions, right? It takes a little bit more discipline. I had a subscriber ask recently, they said, besides handling your emotions and besides risk management, what are some of the things that what you suggest that are good for traders and investors to be successful over time? And I had a few of them, but one of them I had was stop believing, okay? Stop believing something can happen or can't happen. And the best example I can give of that is, I think it was October 2023. Was that when the market, or 2022, when the market bottomed? I can't remember. I'm
22.
Old, right.
22.
So
the bear market in 22.
Right.
Yeah.
So at that point, we had inflation was going through the roof, interest rates were going through the roof, mortgages were going through the roof, and nobody thought that housing stocks could rally, right? And all they did was go up straight for a year, right? So I tried every time I talked to someone, you, a subscriber, a random person on the street, I'm really talking to myself because I'm trying to reinforce these things with me. So when I say
100%,
so when I say, when you think you know what's gonna happen, not only are you open to being wrong about that, but you're also, sometimes you blind yourself to what could happen. So I think one of the most important things you have to do, especially in this phase of the market, when it is very frothy and when you're seeing your random friends get in that don't know as much as you do but are making money, is to stop thinking what you think will happen and just try to go with your price and your technicals. And it's tough. I mean, it's tough, but that's the discipline.
Do you think that is it better to be reactive in this kind of environment rather than sort of speculate what's going to happen, what you think is going to happen?
I mean, it depends on your time frame. Like, so I'm not a big fan of holding a big position into like earnings. I'd rather trade after the earnings, right? Because then the news is out. You can like a great example is Tesla, right? So Tesla, I know when you're watching this podcast in 2156, this won't make any sense, but a week or so ago, Tesla had earnings come out, and the stock dropped after hours, and people were like, "Oh, Elon sounds tired on the call," and so and the next morning it dropped, but then it found a base, and it gave you some intraday spots that you could say, "Oh, I can define my risk now." Like you couldn't really define your risk before the earnings, right? It's a coin flip; it could go up or down. But once the news is out and you see what's happening, then you can react to it in a way I think that's more responsible. I always say this to subscribers: anyone can put up a chart, a daily chart, say this looks good. What does that mean? Do you buy it now? Because if you buy it now, you have overnight risk. If you buy it on a Friday, you've got weekend risk. Do you wait till the next day and maybe it gaps and goes and you don't get a chance to get it? My hand's getting here again.
That's all good.
Or
It's all good.
do you hope that it doesn't open up higher and you can find some? So it all just depends on how much you're watching the market, how active you are, what your time frames are. This is where I envy people that are investors, because when you're an investor and you're a long-term investor, you don't really have to worry about a lot of this stuff. But when you're a swing trader, and certainly when you're a day trader, you have to be aware of all this stuff.
Yeah, I think one of the things that just clicked is you're saying to be flexible, because that's a huge characteristic of successful traders or investors. And I love the expression, don't focus on what you think the market should be doing, focus on what it's actually doing.
Right.
So you're kind of saying, all right, don't pigeonhole yourself into okay, this is the ninth inning or this is the first inning. Be flexible, right? I mean, I think when you already make up that something in your mind, you want to fight it sometimes when the market. I just have a theory: if the market proves me right, I stick with it, and if it proves me wrong, I cut my losses.
So this plays out in a lot of different ways. You get people that will say the market's due for a drop. Okay, why? Well, because monetary policy, or because now we have credit risk. But from a technical standpoint, everything is above every moving average. We're hitting new all-time highs. Yes, it could go south tomorrow, but right now it's not. But they keep saying they're betting on the come. It's going to happen. It's going to happen. So what happens is you get that big drop like we had a couple Fridays ago when Trump came out with the China stuff. I know a lot of people that got short at the end of the day on Friday, and they got their heads handed to them the next week. So again, if you have the luxury of time as a long-term investor, none of this stuff matters to you. You don't have to be reactive. But if you're trying to play in between the cracks and in shorter time frames, you just have to make sure that you're doing things that you're not gonna wake up one morning and be down 25, 35, 45%.
Yeah. It's the time frame is a very, very important thing too, and I think people don't realize that you have to kind of define yourself. Are you a trader or you're an investor? Or to your point, it's okay to be a little bit of both. Have your long-term stuff and trade with a little bit too. So I think the time frame matters a lot.
Well, something you said, Phil, that really resonated with me. You talked about hedging, and you don't always have to hedge your whole position. You can hedge parts of it. And I was recently looking at so I bought Tesla. So I bought an initial position in Tesla when Tim Waltz came out and bagged up, just because he's an asshole, and I just said, screw him, I'm going to buy some Tesla. But I was lucky enough to buy Tesla before it had that big breakout. And once it started to break out and extend, I was looking at this is in September, I was looking at the at-the-money options that were in December. They're December 19th. They were ridiculously fat in terms of the premium. So I started hedging, like I sold 405s, 430s, 485s, and 520s.
Covered calls on your position, or just
against the position.
Against your position. Okay.
But the point I'm trying to make is I was looking the other day. You can almost get 25% if you write at the money calls on your Tesla stock a year out. Almost 25%. Now, some people say, well, Tesla's going to go more than 25%. Okay, so fine. So write it on half of your position or whatever, right? So there's so many different creative ways if you're not looking to make a killing tomorrow or the next day, right? If you have that luxury of time, you have lots of flexibility in how you can hedge positions, how you can position yourself so that you don't have to worry about every tick of the market and everything that happens every other day.
Yeah. Your thoughts on the option stuff?
On the option stuff, I mean, my thing with options is I love to look for options that have fat premiums to them, and I like to write puts against those things. And there's a couple of things that I've been doing for quite some time this year, where you're getting 2 to 3% per week,
Right.
which is crazy, which is great, which I like. And on both sides of that, if I write a put on one of these things and I get put the shares, I sit there and think about, well, maybe I'll sell a covered call a week out,
Right.
make another 2 or 3% on that. And that's always something I'm looking for. And of course, that always happens going into an earnings call. You're going to see that options volatility go up. There's a couple of trades that you can do to take advantage of that. And then they have the volatility collapse after the earnings. But I've tried that before. But really, to find a stock that's doing that when there's no real earnings coming up is really the panacea for me. That's the holy grail. One thing that you were saying about the economy, I mean, what do you think about copper? I mean, copper seems to be, of course, that's an indicator of Dr. Copper or whatever, but it's really been rising very, very nicely and very consistently. I mean, would that indicate to somebody that the economy is actually doing quite well?
You would think so. I mean, there was a story, I think it was this week or last week, that said that, I don't know if this is true or not, that the reason that we didn't go into a recession last year was because of all the productivity gains in AI, right?
Mm-hmm.
And so I'm just not smart enough to know all that stuff. I'm really, like, I say that, but I'm not trying to be, I really am not smart enough to figure out all those different things. And it's also so subjective. Like, by the time whatever is happening in the economy hits Main Street, the move's already been made. So I just try to focus on price, action, and technicals, because I can objectively say, NVIDIA broke the 50-day moving average. I can see that. Now, it's up to me to decide whether I want to close my position or not, and that's a discipline question. But whether their new chip is going to change, the trajectory of their company or whatever, and that's how I feel about things like copper and all the macroeconomic things. They're too subjective, and I'm not smart enough to understand how they're going to relate to me in terms of making money.
The problem that I have with macro is, and I love reading this stuff, but there's too many moving parts with it all, because you're thinking about interest rates, you're thinking about what the Fed is doing, you're thinking about jobs reports and all the housing starts and manufacturing. To me, I don't want to say it's noise. It's too much to follow for me.
Yeah, I'm not an expert on it by any means either, but I do listen to it because sometimes it gives me a little bit of indication as to whether I should be treading carefully or whether I should be, increasing my risk. Again, I mean, we've said this before, the two most important things I ever learned in this business were two words, which is risk management.
Yeah.
And that risk management, that's that little voice that's speaking on your shoulder that's saying, hey, you know what, maybe, you've got enough of this. Let's let these options play out a little bit and not increase the position. But I try to take some of that into consideration at least and pretend I understand it.
Yeah, no, I pay attention to it.
Right.
I just feel like, whenever someone says Fed Chair Powell, whoever the Fed chair is, criticizes them, I'm like, it's not an easy job.
Right.
It's not an easy job because there's 15 different factors. They say, okay, stable prices, full employment, all that, the dual mandate. I think the dual mandate is to prop up the market and destroy short sellers, but that's a different story. But my point is, and then you have political pressures, even though they're not supposed to be political. So I always say with the Fed chair, that's not an easy job because there's too many factors.
And I think that's a really important point that you bring up. I believe that as a society, forget economics, but as a society, we're living in a post-truth, a post-data world, right?
Yeah.
Nobody cares about the objective truth anymore. You just go into your tribe, right? The idea that will not bleed over into economics, right? That these organizations that put out the numbers, how many are unemployed, it's ridiculous to think that that's not going to influence that. And so again, that's so subjective. We don't know what's real. We had the largest revision ever in unemployment, right? It was 1 million. Like, oh, we're just off by 1 million.
Yeah.
Right? So I don't know. So if you don't know what's going to happen from quarter to quarter, if you don't know who's pulling the strings, who's putting their finger on the data scale a little bit to make it seem a little bit better, great. But I know if I'm down 5% in my portfolio, like I know that's totally objective.
That's
right?
real life stuff.
That's real life stuff. So
Yeah.
I can say, okay, I'm down or I'm breaking a moving average or whatever, I'm out. But I can't game what's going on in the macroeconomics world and the Bureau of Labor Statistics. Like I'll be honest, I don't have any faith in that. I feel like whatever administration is in is going to be putting political pressures on those stats to say, like, I'll try to.
I feel a rant
I know.
coming. I feel a good rant coming. Please fire away.
This is not political, but it's just indicative of what we do these days in the world. So I think it was either the Obama administration or the Biden administration was touting how they had more deportations than the Trump administration, right? And then you're like, wow, that's crazy. That doesn't seem to make sense under a liberal administration. But then you find out, oh, they redefined what a deportation was. When someone came to the border and they said, no, go away, they considered that a deportation. I think the malleability of data and what things you're taking into consideration, what you're not, it's much more fluid than we think. And so I just think there's a lot of incentives for whatever administration is in power to put their thumb on the scale. I don't want to try to game that, whether they're being truthful or not. All I know is if I've got X amount of money or X amount of position and it pulls back this much or it breaks this moving average, I can say objectively I should be out at that point.
Yeah.
Rant over. So
No, that was great.
yeah. Edit that out, please.
Sentiment. I wanted to ask you guys about sentiment. I mean, I know at the time of this taping, we're at all-time highs. CNN Fear Greed is not the only sentiment. I look at sentiment collectively.
Well, Friday was down in fear, wasn't it?
Right. It's in fear at 33. We're at new highs, and it's at 33 in the fear range. I look at other stuff. I look at the put call ratios and AII and all these others. There's like 10 of them I look at. But that is a collective. Some people argue with how it's calculated. The point is it's at fear with new highs. Your thoughts on that?
Well, if I go back to some of my math background, or I start to think about how do you see at what stage of a cycle you might be, and I look at that as a graph, and I look at it as the whereabouts we are in the curvature of that graph. We have a rate of change that is starting to decrease. That usually tells me something is slowing down or is heading for a slowdown, as opposed to increasing, the rate of change increasing. So if you look at the gradient of any point on a graph, you can tell whether you are either going up or if it's, and compare it into the past and say whether it's accelerating or decelerating.
Sure, yeah.
That's about the most predictive I think I've ever been able to be. Zooming out on a graph and answering my question there, and deciding at that point whether I'm feeling like we're starting to slow down a little bit. So I do that. That's one of the things that I do.
Can I just say, I think it's the weakest generation of people in general, but traders I've ever seen, where every little dip, people run for the exits. Is that fair to say?
100%. You'll see. You'll see the version of. CNBC has the market in crisis, right?
Yeah, market in turmoil.
Market in turmoil.
Yeah.
And you'll see the version of that by the tone of people's tweets, and you're like, we're not even at the 8 EMA. We're not even at the 8-day moving average.
It's 1 or 2% off the highs. Now, granted, and again, I know whenever people watch this, that Friday when Trump talked about escalating tariffs with China. Granted, that was a pretty ugly day. But it wasn't a crash.
Right.
It wasn't, in my view, a reason to just liquidate your whole portfolio. It wasn't a reason to go short. And I'm not saying that with the benefit of hindsight, because I didn't do that in real time.
Right. Well, but let's walk this back a little bit. It was a crash in cryptocurrency for many people who were highly leveraged. And so the fact that you say this generation is soft, that maybe tells me that they are more leveraged than maybe we were or other people are. Because if you have a minor pullback and you're doing 2x 4x, 5. I mean, I don't know what the maximum leverage you can get is. It's going to hurt. So maybe
Yes.
that's what it is. Or if you're, I think the idea of having, well, I don't think. Here's where I sound like the old guy, right? But like I think this new generation, the Robinhood generation, there's no concept of portfolio at all, right? They have highly concentrated positions in the names that they love.
Oh no, there's no
Right.
asset allocation.
Right. So
Yeah,
when you
yeah.
get the pullback, I think that's why you're hearing them cry, because they are losing a lot of money on a percentage basis because it's all concentrated into one or two positions. And here's the other thing that they do. They will put 3 or 4 positions together, but all in the same sector, right? So that sector pulls back a little bit, but all of their positions are red. So I think maybe that's why they're a little bit softer.
No, that's a fair point. I mean, but it also plays to what I've said many times: is we live in the most impatient world ever,
Yeah.
where people want to do 10 sit-ups and have washboard abs, and people want to have 10, $20 million by Tuesday. And some people are saying, no, Joe, I want it by Monday. I don't want to wait 2 days. I want it the next trading day. So we live in a very impatient world. And because of that, to your point, people are using a lot of leverage and very, very concentrated. They have 2x, 3x, 4x ETFs and options on those ETFs. I mean, I'm just waiting for the 10x ETF. So when the market drops 10%,
They
everyone
just
just
recently
blows up.
filed for 5 and 7x
Yeah,
ones.
saw
And
that.
Did
and
they really?
Here's the other thing
I
is
didn't even
that
see that.
so we have 24/7 crypto, right? We have overnight. We actually have liquidity in a lot of names overnight.
And a lot of
right?
names, not just SPY and Qs,
It's
like
crazy.
a lot of names.
And I just saw last week that somebody, CBOE or someone, has filed to like extend the hours for options trading. Right?
Yes, I saw that pre-market and after hours.
So you talk
options.
about people that are impatient and can't wait. It's like it's 3 a.m. I've got to trade my Nvidia options. I mean, like
I can't imagine the spreads on that being in after hours being liquid or fun to trade those spreads.
No,
I mean, an Apple or an Nvidia call, like or put or whatever, during market hours is pretty efficient as far as like you're not going to have a 30, 50, 80 cent spread on normal stuff, but after and post, I would think it would be
yeah, the skew would go crazy.
right.
Yeah.
Well, that's one of the reasons that so many people apparently lost so much money on that Friday in the altcoins or the shitcoins is because there was no liquidity. And people were saying like, oh, I had a stop in. It's like they don't understand that if price comes to your stop and there's no willing buyer, your stop doesn't trigger.
Right.
So,
Yeah.
you had this cascading effect where, and these crypto firms are not stupid. They're not going to be on the hook for your negative margin balance. So they liquidated everybody, right, at the lows, and then everything popped back up. So, yeah.
You were going to say something, or I thought you were. I don't know, leverage, maybe, I don't know. But
Well, no, it's
Our options.
anecdotally. I mean, the thing is, one of the things that pops up on my screen all the time is some of these Reddit conversations that I somehow have become involved in, and just looking at
somehow become.
no, I mean, you just look at something and all of a sudden they start sending you these things, and I just sort of look at them as a barometer. And yeah, to your point, there's a lot of just crazy leverage that people are getting themselves into, and when things go south, they don't know what to do. They're losing their minds.
Yeah, and I'm not criticizing. I mean, I trade aggressively. I'm not criticizing the leverage. I'm
Right.
just saying you have to take the good with the bad.
Right.
Sure.
Yeah, yeah.
So, I had a stock recently that went from 50 to 100 in a very short period of time. I think I took it at 65. I sold it because I don't care anymore. I'm happy with the gain, and I just
Right.
accept I'm never going to get the highs or the lows.
Right.
At the time, it was the high, and then it keeps going. And then someone I know held it, and then it comes right back down to 50.
Right.
And so I'm like, all right, and they're like, what the heck's going on here? And I'm like, the thing went up 100% in 3 weeks.
Right.
If you are not taking, like you've talked about taking something off the table, because a lot of people forget, let's just round numbers. If you have 100 shares, you don't have to sell the whole 100. You can sell 10, 25, 50. So I said, you didn't take anything off the table and it doubled? No. And it round trips to 50. And they're like, what's going on here?
Are you familiar with that the Dave Ramsey meme where he's sitting there like this? Dave Ramsey gets callers in that tell him stuff, and he always just goes like this. So the meme is he's sitting there, and the guy says, "So it's like Dave's talking to him." He says, "So you took a $250 advance on your credit card to invest in crypto?" "Yes, Dave." "And it ran up to $3.5 million?" Yes, Dave. And then it crashed to zero. Yes, Dave. And you never paid off that $250. Yes, Dave. Right? I mean,
it's the same concept. I'm not. If people want to use leverage and it's impatient, I'm not criticizing any of that. I'm just saying it is what it is. But any little dip, and again, a difference, 2% off the highs on the S&P. Yes, growth stocks are going to correct 5, 10, 15% or more.
I'll criticize it.
Crypto's going to drop a lot more too, but it goes to your point of risk management.
Yeah.
But
the methodology that turns $50,000 into $500,000 in 30 days also turns $500,000 into zero.
Yeah.
And maybe more if you're on
and sometimes
market.
quicker,
It's
and
just
sometimes
a zero-sum game.
100%.
sometimes quicker than 30 days.
Yeah, right.
Elevator up or stairs up, elevator down.
yeah.
Yeah, but it's a zero-sum game. So your loss is somebody else's gain, and vice versa. And I turned 50,000 into 500,000 in 30 days, and somebody says, "Well, I turned 500,000 into 50,000 in 30 days." So it depends on which side of that you're on. And ideally, what you want to be is you want to be somewhere in between those two, where you manage to control what happens. It's great. Experience comes as a result of making mistakes, and mistakes happen because you don't have experience. So the thing is that when I first got into trading myself, I got burnt on a couple of positions. This is 97, 98 or something, or maybe even before there. And I credit those mistakes with some of my, for want of a better word, fear.
Yeah.
And caution going forward. I was ask myself, okay, what if this happens? What if that happens? Am I happy with this position? So those experiences are valuable.
But I think there's a whole generation right now who hasn't had that first moment
Right.
that you had, right? They're in a market that's helping them think that they're geniuses because everything goes up. And at some point it will stop going up, and at some point they will get hurt bad. Will that be tomorrow? Will it be 2 years from now? We don't know. But and that happens every cycle, right? Every time the during the financial crisis when the market crashed, there were people that got out of the market that never got back in, right? Happens every generation. In the Depression, whatever. But then the corollary to that is every time there's a new bull market, there's a fresh generation that doesn't have that experience. Some people will survive, like you did, that will go, "Ow, that hurt. What did I do wrong? Let me reconfigure," and they'll move forward. But some people will just go like, "That's it. I'm out. I'm done."
Yeah, you don't make money in the market. You lose money in the market.
Yeah, and I think what I would say that what Joe and I try to do, and what other people try to do, is we try to, we made these mistakes. I still make these mistakes.
Same here.
But I'm trying to help people shorten their learning curve so that they don't blow up. Because as long as you don't blow up, you can still learn and still stay in the game, right? So and again, it's a little bit self-serving too, because when I'm telling someone here's how you should manage and use a methodology, I'm still talking to myself.
Yeah.
I'm always talking to myself, because trading is like anything else. You don't go to the gym once and work out and then you're in shape forever, right? You have to do it on a consistent basis. You have to reinforce those rules on a regular basis. And if you don't, one or two, slip-ups and you could be out of the game.
There was a Louis C.K. bit when he talks about it was the first time internet was on the plane. And you hear this one of the pilots like, "There's internet on the plane." And then it went down 20 minutes later, and the guy next to him slammed his laptop. He's like, "This is bullshit." And he's like, "How are you upset about something you didn't even know existed 20 minutes ago?" And then later on he says, "There was no guy sitting next to him." He says, "That was me." And he's telling the comment. So he's like, "There was no one." He's like, "That was me who did that." And he just made the story. And that's to your point. I do that a lot, where when I talk about things, I'm actually talking to myself.
Right.
Yeah. Because I make these mistakes all the time, and I just try to minimize them and try to learn. I mean, I accept I'm never going to get the highs or the lows. I'm not going to trade things perfectly. I'm going to screw up, but if you can minimize those, then you hopefully make some progress.
Yeah, and if you walk away from the table at the end of the day with a profit on these things, then that's really the definitive the point of what we're doing. We're trying to make a profit here. We're trying to increase the value of our investments. but we're not necessarily trying to nail the exact top and get in at the exact bottom either.
And the unfortunate irony of that is that the way that Joe and I and you talk about markets is real, right? But people are drawn to the people that always get out right at the top and always buy at the bottom, which we know they don't,
It's
right?
such bullshit.
It's such bullshit. But those are the people that get the big followings, and those are the people that have the high ticket subscription services. And I don't know, people want to hear a story.
I don't know what's worse. These people who claim that they're just making every perfect trade, or their followers who are dumb enough to
Right,
believe it.
right.
And I know gamblers like that.
Yeah, yeah.
They'll tell you every story about when they won,
Yeah.
but they leave out the ones of where
Floyd Mayweather used to do that. He posted every sports bet. He only wins.
Yeah.
Until finally he's like 36 in a row. Wow, you've just never lost. And then they literally he just stopped doing it because everyone said,
Right.
all right, stop it already. It's embarrassing.
Right.
Who was the guy last week that claims to have won 1 million in Vegas, but left out the part of where he lost 5 million?
Yeah.
Wasn't there a senator or
yeah,
something
yeah.
on his tax return? I forget who it was who said he won whatever he had to.
Was it Pritzker? Or was it the
forget,
governor
there's
of Chicago?
I think so. Yes,
yeah,
yes,
maybe.
yeah. And he said he won 1 point. He's like, I just got lucky in Vegas or
Yeah,
something.
yeah,
But did he leave out the losses or?
Yeah, there's a $5 million loss.
I didn't see that part.
funny.
It's fascinating. It's what I love about these markets. It's dynamic. I don't know. It works for my personality. So I feel like it's never a dull day, and it's always engaging. It's always. I love the Paul Tudor Jones line: evolve, adapt, or die. You know, with adapt being that key word. You know, Blockbuster didn't adapt, and I think we have to adapt to when someone says, "Well, there's high frequency trading, or there's the Fed, or there's the." It is what it is. We have to adapt to the variables that are thrown at us.
Yeah. You know, from somebody who puts a lot of importance on the value of what I'm buying or I'm investing in, you know, that's a difficult thing to mitigate because very often I can say, okay, the valuation of this is getting way too high, but yet it keeps going up and it keeps going up and it keeps going up. And you want to be able to participate in that, but you want to do it in a way which doesn't go against your discipline. And that's the turmoil that tends to go on in my head a lot of
Value
the
is
time.
very subjective, though, because
Right.
Amazon for the longest time was losing money, but there's no value. Even though they were cash flow positive, they were just reinvesting into their business. But what's the value of? You know, I think they're just dropping off packages at my house at this point. Like I don't even know. I'm like I didn't even order this, but I like it's just falling from the sky. But what's the value in something that? You know, like value is different.
I mean, just the valuation. If
Just
you're
valuation,
Looking at,
you're
you're
talking
looking at fundamentals.
Yeah.
So I do look at fundamentals. I do pay attention to those because at the end,
What's that again?
what's that again? Because at the end of the day, if you end up, you know, having to be put a stock, you've got to be able to say, I'm quite happy owning this. And in order to be happy owning it, I think you need to be familiar with the economics of the company. You need to follow it. And then you can make that decision. But in an environment where all of a sudden multiples are basically going up, and this may be rather extended, you have to sort of then play a question and answer thing and start talking to yourself and saying, well, okay, am I going to be happy, you know, holding this?
You're making a great point, though, is that most people are not doing the due diligence.
No.
Most people are not looking into companies.
Right.
They're like, oh, I didn't know it was a semiconductor. It was 4 letters. I just traded it. Like, they don't know what it is.
Well, go buy some biotechs, you know.
Why not?
Yeah. I mean, there's your stocks that perform like a roulette table,
Yeah.
you know, both to the upside and to the downside. But those are not things I usually dabble around with. Like I said, I'm just looking for companies that have something that I would be happy owning and holding, but also that has a great deal of volatility in them as well. The volatility is the key here. You know, that's where I want to actually take advantage of that in the option writing that I'm doing.
Do you do much fundamental work with some stocks or?
No, so one of the things about having a subscription service and a Discord is that I have lots of eyes on the market that have different viewpoints than I do, right? And so they'll surface ideas in there from maybe someone does it from a fundamental standpoint. And for me personally, I love when there is a really good fundamental story and a really good technical story as stock. I love that. So like I don't eschew fundamentals. The only problem is every time the fundamentals and the technicals diverge, and I've said, well, I'll stick with the fundamental story, I always get burned because by the time the change in the fundamentals shows up in the price, it's usually too late. Because I'm Charlie Sheen with Blue Star. I'm the last man on the deal team. I'm not going to, Paul Tudor Jones has a team of people and insiders and,
globally.
Right. They have their finger on the pulse of what everything a company's doing. I'm so far removed from that I feel like there's no edge for me there. So if I can get that tailwind of fundamentals, right, and they're coinciding with how the technicals, I'm super happy. But I can go down a laundry list of names that the technicals deteriorated, and I said I still believe in the fundamental story, and my CPA says that's a good write-off.
The market doesn't care.
They went to zero. So
yeah, I do appreciate that. I mean, obviously, you want to have those two things working together, and not diverging from each other. And there have been many times where I've owned a stock where I've really believed in what the company did. I really believed in the fundamentals, and the stock couldn't get any love from anybody. At the end of the day, it's going down.
But
right?
So I think you can take that approach of like, I'm going to have faith in the fundamentals when you're in a portfolio approach, right? Because you've got multiple names and there's no one name that's going to, it goes to a zero. It's not going to really affect your overall portfolio. I think what happens is a lot of times traders, they play this game where like, I'm a trader, but now I'm kind of an investor. And so they end up having one name that is a big part of their net worth that is now their investment thesis, right?
Because they didn't stick to a stop.
Right. So they're trading everything else, but they're holding this one thing, and it's such a big piece of their net worth that when it does go to zero, it hurts. So I mean, that's the basis of any fund manager, portfolio managers. Like, you're going to have lots of names, you have lots of fundamental thesis. Some of them are going to go south, but it's not going to affect the overall performance. But you can't really do that in trading, especially with concentrated positions, because it can really bite you.
What's your funny line about your mental stop?
Yeah.
I love that line.
I said I had, now I can't remember. I had a mental stop in once that I didn't obey. That's how I got my second son.
Mental versus mental stops. It's funny. You want to talk music? You want to?
Yeah, sure.
I know you guys are in the same genre a little bit too. I love the conversation before.
I'm just going to sit here and go like this.
No, please. I'm happy with you asking any questions to Phil.
I am a music fan. Okay?
Yes,
that's it.
Yeah, but no, some of the punk stuff and stuff. It's not. I don't follow it. So if you want to ask Phil some questions, fire away. Or I don't know.
Yeah. So let me ask you this question, because I think. My first thing I was going to say is, boy, it seems so unusual for someone to be so creative and have a career in music, but then also be so on the ball when it comes to investing and everything like that. But maybe I'm wrong. Do you run in circles where there are musicians who are into investing in the market just like you are?
Absolutely. There are a few people who are. Some of them might be a little more bold than I would be.
Right.
But they're varying degrees, absolutely. And one of the things that I'm quite passionate about is trying to talk to people in my industry, in my business, about how to manage their wealth, or how to manage the money that they make from their careers. Because in our business, it's feast or famine, and you have to try to keep an even keel.
Right.
And that's really the key to it, is keeping an even keel, and also putting something, having something work for you so that your future is secured. Because there's no music retirement account. It doesn't happen naturally. There's no institution that comes and says, well, we're going to pay you a pension now. You have to take care of that, and that applies to all creative fields, I think. We get into what we do because we're passionate about it. Sometimes it's the only thing in the world that makes any sense, or seems to. And I always talk about Bob Hope, when somebody's asked him and said, wow, you're pretty successful in the movie business, made a lot of money in the movies. He said, well, I made little money in the movies, and then I parlayed that into real estate, and then they named an airport after me. So, you have to have that. And part of what my mission is to try to talk to people and to try to, wake them up and say, hey, listen, you can do this. So yes, there are definitely some people in the business that think that way. I also was very active at a time before we had computers and iPhones and stuff, and I would spend hours and hours and hours on tour buses, twiddling my thumbs, either talking, drinking, telling jokes, and then when I got fed up with that, started reading books. You know, so we had lots and lots of time, and people would learn, would read books and maybe learn something else, learn another craft. It's not unusual to have musicians now that do many, many different things.
Right.
At first, I started wanting to be a bass player, and then I had to be a bass player. Then I had to be a fashion designer. I had to be a photographer. I had to be a video director. I had to be an accountant. I had to be. You have to do all of these things, and then people have side businesses now. So I had an audio consulting business on the side.
You had a restaurant too.
I had restaurants as well.
Yeah.
That was more for catharsis more than anything else. But definitely having a business, having an audio consulting business, helped me and buoyed me during times when music was, we weren't really sure what was going on in music. So it's not unusual to find musicians that now have their fingers in several different pies as well.
That's great to hear because, you know, one of the tropes that's out there when it comes to like athletes, like you'll hear about these athletes that make $100 million over their career and then they're broke, right?
Yeah, 95% of them I think are broke within 5 years.
Right, and you hear the same thing about musicians. But one of the things that so I have a few friends that are professional athletes. They say that they're actually I don't know if it's the NFL or if it's the Players Union, but they're actually educating players now to like, hey, let me tell you, it's not all going to be like this.
Yeah.
And it's great to know that you and that to some extent people in the music industry are doing that too, because I think one of the great things about that is if you get that financial, you said feast or famine, right? And I would imagine if it's like that, your choices on what gigs you take and what you don't are very informed by that. But if you have a financial foundation, right, you maybe can take a gig that's more creatively fulfilling, right, and less lucrative because you don't have to. And I think that's great for a creative.
Absolutely. You do the work that you want to do.
Right.
You do the jobs that you want to do. You don't have to do every single thing that comes across the table. You know, a very good friend of mine was calling me up, and he has some investments in real estate, and he's looking to liquidate some of those now. They've brought in income, and his goal is exactly that. I want to put this into a retirement so that I can sit at home, live relatively debt-free, and only take the jobs that I want to take because they mean something to me. And that's a great place to be when you're in the music business.
Yeah.
You know, there's again another thing that I always tell people is, you know, there are some things that we do because of the passion of them, because we love that music. There are some things that we have to do for money, and occasionally, those two circles intertwine, and that makes it all worthwhile. But that that area where those two circles cross is not that big. It's not that frequent. So if you can find yourself in a position where you don't have to worry too much about that, you can then just pick the jobs that you want to do, work with the people you want to work with, and it's very risky. In this business, you're only as good as the last thing you did. So if you're starting to do jobs just for money and they may not be particularly notorious, that could actually hurt you going forward. So that will compound on where your prospects are going to lie and where your opportunities are going to lie, and that's not something you want to take lightly.
Right.
I think playing Joe Fahmy's birthday party is going to
You get residuals on that?
propel your career.
The phone hasn't rung once in the last 24 hours.
Is that scale? Is that what you for?
I thought there's something wrong with the phone, but maybe I had the ringer turned off or something. But
It's too funny.
Yeah.
So my brother-in-law was asking. My brother-in-law was at the gig last night.
Yeah.
And he's a orthopedic surgeon, but he's been learning the guitar over the last 3-4 years. So he really wanted to watch you guys, what you're doing. And he said, he was like, he couldn't figure out if you guys had just got together and played those things off the top of your head or if you practiced. And I said, I figured you guys play together a lot or enough that you know each other's moves, but is that the case, or did you just kind of...
not really.
They
No,
don't
I don't.
rehearse- they don't
look at
rehearse
that.
at all.
Look,
They don't
that's crazy.
rehearse at
No.
all.
You hear that, Roger? That's crazy.
I love Zach. I think he's great. He's one of my favorite local musicians here. He's one of my favorite musicians, period. Great singer, great guitar player. He's just an all-round great guy. But, you know, sadly we don't have enough time to sit around and play together and jam as much as I would like to. So last night we just played off the cuff.
So
That
when
was
they
it.
said we're going to play some Journey,
Mm-hmm.
and what were the Journey songs they did? They did I can't
Separate
remember.
ways.
Separate
They
ways,
did
right?
Separate ways.
So
yeah.
no practice. You guys just knew your parts and
Yeah, I just gave it a listen
Yeah.
and made sure I,
sure.
you know.
Why not? Just give it a listen.
But you know, how does an orthopedic surgeon?
But that's a solo event, right? You don't have you have nobody else that you're.
But you
worried
don't just
about.
cut up the patient and be like, all right, I'm going to repair the knee or whatever. I
Right,
mean, there's,
right.
it's, I am amazed by these guys too, because that's why I'm just grateful I even got to play a couple songs. But I was watching the behind the scenes. They're just pros. They're just,
Yeah.
I don't know. Maybe there's certain trading instincts you can't teach. Maybe there's certain music instincts you can't teach. I don't know. Or is it experience?
It's experience. I think it's a To me, music is a communication. When you're playing with somebody, it's like having a conversation. You listen more than you speak,
Right.
and then when you speak, you interject something useful, which is relevant and intelligent. So by listening to what other people are doing, and then you play around that. I mean, the
Right.
parts are set.
Yeah.
These are the notes. How do you play those notes? How do those notes relate in terms of timing, in terms of intensity, in terms of busyness, or simplicity to what's going on?
Right.
So it is like a conversation, and nobody likes to be in a conversation with somebody who's just conducting a monologue. And
Right.
the same way, you get these guys who'll just play and they'll noodle and noodle and noodle, and you can see they're not even looking at anybody.
Right.
And if I stop playing and I go to the bathroom and come back, he's not going to notice.
Right. But it is somewhat different when it's a lead guitar or even singer or bass than maybe like the drums. Like, so my sister had said to me, she said, so I've played since I was 18, but just in an amateur. And she said, if they said right now, come up and play, could you play that song? And I said, if they said come up and play, and I was stupid enough to get up there and actually do it, I said, what I would do is I wouldn't be doing all the texture of the song, right? The fill here. My goal would be to be as rock solid as possible.
Keep a beat.
To not screw them up, because I'm not good enough, especially in a live situation like that. But you guys were playing all the nuances that people recognize from the album, right? So that's the difference between a professional player and an amateur.
But you
obviously.
start off absolutely. You're absolutely 100% right. The most important thing is the fundamentals of
Right.
what you're doing. You have to provide that,
Right.
and then you can build on top of that.
Yeah, especially as a drummer, because that's what everybody's kind of keying off of, that beat and what you were doing.
What I find more amazing, though, is writing of music, which you've written a lot of amazing songs and continue to, as you have a new album that's almost
New album,
done, right?
Yeah, just finished it. Just finished mastering it.
I'm blown away by the process of writing a song.
So what is your writing? Do you have a writing process?
Yeah, I do. I mean, you have to have an inspiration. You have to have the inspiration of why you want to write a song. And for me, it's a mental process. It's something that I feel something, whether it's happiness, sadness, up, down, whatever it is. But I feel something about a situation. Maybe I don't understand it very well, and then I start thinking it through. This is the basic fundamentals of the song, of the lyric. So when you're writing lyrics, that's what you do. I mean, my wife is Jen. She's a psychology therapist, right? That's what she does. And she said to me one day, she said, when we were first together, and she said, have you ever considered going to a therapist? And I said, no, why? Well, you can get to talk to somebody. You can talk about all your things that you don't understand, your problems or whatever it is. And it's healthy. You don't have to be like crazy or anything, but it's a good thing to do. And I looked at her and I said, well, if I did that, I'd have nothing to write about. and that's really, because it's a psychological process.
Yeah.
If I'm really upset about something, or something has affected me that much, and I start writing a song, I'm pacing up and down, a couple of glasses of wine late at night when there's no distractions, writing, talking to myself. And by the time I've finished that song, I really understand clearly how I feel about whatever it is. And
Yeah.
I feel that's kind of a resolution in a way.
But isn't that what's so unique about artists, right? They can take all the noise and all the emotion that we get in the world, and they can cathartically turn it through a process, everyone's got a different process, into something that's creative,
Yeah.
right? Where someone else might, do something destructive in their life, or someone, right? I mean, that's what differentiates an artist from.
Well, that's why I'm
Yeah.
blown away. It's chorus, it's melody, it's
Yeah,
lyrics. It's
yeah.
like I can't do any of
It's
that.
a lot of, but
It's-
what's the end game? What's the end game with a song? For me, the end game is if I felt a feeling, a sentiment, if I felt incredible sadness about something, and I write this song, and a person listens to that song, and just listening to that song, it emotes that same feeling, then I've transferred that feeling. That is a successful song to me. And same if it was a feeling of elation or a feeling of like being happy, or if you can transfer that through your art medium to someone else, then it's been successful. One of the toughest things, I think, just for me, there's differences of opinion that I've heard with this point, but one of the hardest things is when I finish writing the song, I then try to strip out anything too personal out of it, so that someone else can hear it and not think it identifies, and then think it identifies with them themselves.
It's more universal.
Yeah, I'll give you an example. Let's say I'm writing a song and I say, I was in love with this girl and then she dumped me and broke my heart. Okay, well, that's too bad. People say, oh, that's a sad song. Yeah,
Right.
I feel for you. You change one word. Have you ever been in love with somebody who dumped you and broke your heart? Now it's about someone else.
Right.
Now it's about the listener. And then they take possession of it. They take possession of it the same way that I look at a photograph and people love, color photographs. They look great. People love black and white photographs even more. Why? Because they sit there and they have to fill in the gaps. They have to fill in their own colors. And the more they fill in their own colors, the more they take possession of it, it becomes their photograph. They identify with it. And for those reasons, I think it's very important to write a lyric and then have it in a way, have it presented in a way which is sort of anonymous, but still manages to emote that feeling that you had when you wrote it.
So there's a writer that I really love, A. Gill, who was a British writer who passed away, unfortunately, and he once described his writing as it's like when you pour. His writing is the version of Lipton soup, right? You just put it out the powder, and then the reader puts in their emotions, right? And they make it their own.
They
right?
make it
He's
their
like,
own
that's all right? That's all I do. So I got a question then. If you're, let's say, some very intense, acute emotion comes up, and you're sad, and you want to write a song. You write the song. So 3 questions. 1, when you're done writing the song, does that process the sadness? 2, when you play that song again in the future, does it take you back to that? Do you feel sadness? Or 3, if you wrote the song for someone else, when you hear it, does it take you back, or is there somewhat of a distance? Like I processed that, it's out in the world now, you're not as connected to it.
Once I've processed something, I don't discard it. No, I understand it. I feel like I've thought it through.
Right.
I was talking to somebody recently about a parallel. Something really, really bothers me. It's so much so that it's distracting. I can't do anything. We've all been through that
Sure.
situation, whatever, something personal. And then the human psyche is very good at making deals. And so I would sit down and say, right, enough of this shit. I'm going to sit down and start a clock. I'm going to give myself 30 minutes with a pad of paper and a pen and nothing else, no distractions. I'm going to give this my full attention for 30 minutes on the condition that once I've done this, you leave me alone the rest of the day so I can do what it is I'm trying to do. That's a sort of parallel of how I kind of think about these things. So I really want to kind of get into this song just to understand it, and when I feel that the song is written, I usually feel like I can, exhale and I can say, wow, this really sums up very well how I feel about it. Doesn't mean to say that if it was a bad thing, it's gone away. If it was a good thing, it's gone away. It's still there, but at least I understand it now.
But that's a very analytical approach you just talked about. Like you're making a deal, right? Like
Yeah.
if I do this for 30 minutes, it'll go. And you mentioned your math background before, so I wonder if there isn't a little bit of that, right? I mean,
I suppose so. Maybe there's a certain logical, scientific kind of process that goes on in my head,
right.
which I think I got from being a kid, being a complete nerd when I was a kid. Which I like being a nerd. I like being into sort of weird things like electronics and chemistry and stuff like that. I was useless at sports. That was something I still am. I have no
That must
idea.
have been tough growing up in England, right? I imagine a lot of sports at school and.
I went to a school that was named after the guy who invented the game of rugby.
Okay.
So I bet you can guess what the school sport was,
Yeah,
right?
yeah.
This is not a good thing. Not for someone like me. Because, every single week they'd come back and it was like
Yeah.
3 broken, clavicles and broken this and broken that, and these kids like hobbling around on crutches. And very early days, I learned some of the finer techniques of the game, which is if you find yourself in the unfortunate position of having possession of the ball,
Yeah.
what you do is throw it as far as you can in one direction and turn around and run as fast as you can in the opposite direction. Needless to say, my rugby career was over before it started. Also, we had a great music department at that school. It was a legendary music department. We used to do a concert for the Queen, a classical concert for the Queen every year. But coincidentally, all the music activities took place at the same day that all the rugby activities took place, so you couldn't do both, and that was just fine for me.
Yeah.
So
It's a good choice by default.
it was great. Yeah, we had a lot of musicians came from my school. So
It sounds like you you went to school, which the American version would be. I went to Vince Lombardi High School,
Yeah.
which was like a big football
Okay.
coach back in the '60s for the Green Bay Packers. Right?
Yeah.
So if you're at
But
that
you also
school,
had, it sounds like you also had Berklee School of Music.
That's right,
kinda,
that's
you
right,
know,
or
on the-
totally
on
Berklee
the,
School,
On
yeah.
the flip side.
Yeah.
Really quick, when you mentioned therapy, we've had conversations before, and what's
Yeah.
one of the things you
yeah.
say?
So so I've been did my first trade in October of 1985, so 40 years ago this month, and so I often will get people, younger people in trading, and they say, what would you suggest? And I say, the first thing I tell every trader, go to therapy, because there's something about the market. It has some amazing ability to hone in and distill your biggest insecurities. Like I think, like people struggling in the market has more to do with they didn't get picked for the baseball team, or they never resolved their issues with their mom, than it does what's going on right now. And look, therapy just in general is a good thing, although apparently it makes watered down songs. But I think the big problem is, and I'm going to date myself by saying this reference, but I think people come into the market and they think, I'm going to trade like Gordon Gekko, from Wall Street. I'm going to be this swashbuckling, and I'm going to go for the kill. But internally, their emotional state may be totally out of whack with that. They may be more conservative internally than they know, and so there's this disconnect that they're not even aware of. They're acting in a way that their DNA is saying that's not right, and so it's causing them to make decisions that don't true up with whatever style they're doing. Once you get into therapy and you kind of figure out who you really are and what your real personality is, you can true up your style of trading or investing with your emotional state, and it's a lot easier.
I don't think there's any job in the world that teaches you more about yourself than trading.
Totally.
I don't say any, but it's one of the most. Maybe golf or tennis, like an individual sport where there's a lot of opponent psychology and stuff. But trading, I've learned so much about myself through trading.
Because it's all about losing.
Yeah.
You're going to lose by definition. It's a feature, not a bug. You will lose on more trades than you will win on. So that's tough for people that want to be right. Like growing up as a kid, I always wanted to be right. And when the market's telling you you're wrong, the only thing you can do is not sell to prove that you're still right. But at some point, you have to sell or you go to zero. So learning to take those losses, learning that, quick, short losses, getting your ego out of it, enlarging your scope of the time. I'm not trading for today and tomorrow. I'm trading for the next 10, 20, 30 years. That helps, but it's tough. You're right. It like I said, it crystallizes all of our deepest insecurities and just puts them right in front of us.
Yeah, that's about as true as I've learned.
was it Bill O'Neill that was talking about being right on 3 out of every 10 trades, and
Yeah.
if you manage your losses, you should be overall up.
Yeah, he gives an example of just round numbers. If you on 3 trades, if you cut your loss at 7,
Right.
and you're going for a 20%, you can be wrong twice and still make money. So you make 20% on one, you lose 7, you lose 7. So you're only right on 1 out of 3, and you still net a profit. So, and again, those numbers can change depending on how many trades.
And some of these stocks recently, I mean, 7%, you'd cut your losses. I think you'd be doing what you said earlier, selling everything the minute you get a dip.
Some of them are very volatile. There are a lot of when you're in a good market that's loaded with growth and momentum names, 7% is an average range of some of these stocks on the day. So both direct, even some ETFs like ARKK, that moves 3 to 5% every day. Not every day, but that's not abnormal in both directions.
I know traders that in the last year or so have gone from daily charts to weekly charts just because they need that range, right? If they are setting up their stop loss based on candles on a daily chart, they're getting stopped out. But if they do it on a weekly chart, now that only works until it doesn't work.
Yeah,
that's the sort of market that we're in right now. So.
Yeah. I just looked at the time. I said I didn't have any notes because I was confident that you guys would. I put the pressure on you, and you passed with flying colors. I didn't.
Wow. Thank God for that.
I'm kidding. No, I love this. I feel like we can keep going for hours. So this is. I love it. I love the market talk. I love the music talk. I'll leave you with what. Go ahead.
No. Just another question on what you're saying. I mean, do
please
you
go
think
ahead,
that a lot of new traders are cultivating technical skills and finding ways to interpret technical information from charts? Are they getting smart on these?
I think technical analysis is more widely accepted than it was maybe 15, 20 years ago. Like it was voodoo.
Very
right?
taboo.
Right.
Sure. Yeah.
But I still think in order to be consistently profit, I don't think there's any shortcut to putting in the work, right? You have to show up every day. You have to do your charts, right? And I'm the laziest guy in the world, right? I'll tell you this story. So I started I had an online blog that I started in 2007.
He's a great writer, by the way. He writes very well.
Okay.
Yeah.
So anyway, I started.
No, I'm being honest.
Thank you. I started a blog in 2007 about the market, and in 2018 I turned it into a paid blog, which was not a lot. I think it was $100 then. I'm a super lazy person, but my sense of obligation is more powerful than my sense of laziness. So once I turned it to a paid subscription, even though it was just a little bit, I felt obligated to every day show up for my subscribers. I hacked my laziness, right? But it's hard. And I think a lot of people, especially a lot of new people that don't know how the market works, haven't been around for a while, they're just taking swings out there, right? And I would say the technique that they probably are just honing in on most is just momentum. You know, just things are going, and they think it's going to go to the sky, and then they'll curve fit some sort of fundamental narrative to justify why that's happening. A great example of this recently is that stock. I don't know if it's Oklo or Oklo, but it's the stock, and for people out there that don't know, it's about miniature nuclear reactors supposedly that they're going to make, and it's going to help power AI. They have no revenue. They have no product. They don't have any concept of a revenue or product for like 5 years, but the stock went crazy, went parabolic. And people, I would see a move that everything I know from a technical standpoint would say, you got to start taking profits. And I would see people going, I'm buying more. And then they would justify it with that story. So I think there's a lot of that going on. But to your original question, I do think more kids are open to technical analysis. I think the CMT organization and some of those technical analysis organizations are they have much more reach than they did back in the day. So now whether people are obeying their technical rules, that's a whole different question, because that's human nature, which never really changes.
No, I think you're right. I think it's becoming more accepted. I talk about technicals all the time, and I just say that whole line we talk about all the time: do what works for you. Some people say they don't like the technicals. I'm like, fine, it doesn't matter to me. I'm doing what works for me. So it's, I think it's become more accepted. Yeah. Leave you guys with whatever closing thoughts you have: markets, music, life, anything.
Well,
if not, we'll do it again soon for sure. But
I don't know. I think markets-wise, one little thing I came across was that how many funds have underperformed their benchmark this year. So I don't know if that's going to result in a bit of a rise towards the end of the year. Certainly in the big guaranteed names, you know. So as pricey as they are now, they're probably going to get pricier, right?
yeah, there's the end of the year chase.
Right.
Yeah,
So-
with performance, it's a very common thing if people are behind.
Yeah.
So since Phil said something market-wise, I'll say
say some
something
music.
music-wise.
Perfect.
So when I was a kid, you would have a band, and with the exception of bands like the Beatles or the Stones, like a band would get hot and they would have a good 3-4 years, and then there was a finite part of their career. That was it. They're done. And I always wondered, like, what do these guys do? How do they live? Right. My brother-in-law and sister-in-law, my sister and brother-in-law are going tonight to go see Tears for Fears. Right.
Okay.
And I think we're in this mode now where there's a sustainability for bands like that I saw when I was a kid, right? That they can still be out there and performing and having a career and making money and supporting themselves in a way that never could be done before. Obviously, part of it's because of the internet, part of it's because of social media. I think that's great because I don't want people that make such a contribution to our history, our lives, our memories to have to go then get a job painting, painting walls.
Yeah,
So
yeah.
I think that seems like it's an evolution in the music industry, and I love it.
I agree.
Yeah.
Thoughts on that, real quick?
Well, it's amazing when you go around, and especially when you do some of these heritage cruises and stuff. They have these cruises, and they do an 80s cruise, and all of a sudden you've got these bands that had hits in the 80s, and there they are. They're still performing. But, if you have one or two songs that a promoter can stick on a billboard, that's enough to bring people in, and that's enough to allow a band to continue to perform and continue to work. But you're right about about the 3-year window. I mean, a generation in music is 3 years, 4 years maybe if you're lucky, and then you've got people whose kids say, no, I don't want to listen to that. That's my parents' music. And even if that band has evolved with them, there's a great example is Sting. I used to go and see the Police when they used to play in West End Lane. There was 4 of them. There's 4 people in the band. Henry Padovani was the other guy. And then he left to form a band called, I think, the Flying Padovanis. And the Police went on and did what they did. They became very successful. And then when Sting brought his first album out, that jazz album, everyone was scratching their heads going, what is he, why would he do this? Well, what's going to... And he continued to do that. But what happened is he aged with his audience. It
Right.
was the same audience that went with him.
Right.
And I think that was the key to his success. It was a brilliant move. And maybe the foolish move is to try to reinvent yourself as something which is following current trends, because that's going to be rejected by the young kids that are going to look at that band as being
Right.
something that was their parents' generation.
Right. And you're also going to look like the father who tries to wear the hip jeans even though he's not hip anymore. Right.
Right. Yeah.
Which would be me.
So there's a lot to be said for having success, having a hit, and then taking your audience with you,
Right.
and evolving with them, and keeping them near and dear to you. It's all about the audience. It's all about your fans. If it wasn't for them, we wouldn't have the opportunities that we have. They're part of our team.
I'm still working on getting fans. One of these days. I appreciate you guys for an amazing conversation. This was great, and for being great friends, and for being rock stars. And hopefully we can do this again soon.
Yeah.
Thank you.
for having us.
Absolutely.
Yep.
That was wonderful.
All
Happy
right.
birthday.
Thank you. Appreciate it. Thank you, guys.